Stop worrying about Tesla's monthly sales dip. Seriously, if you saw the headline, Tesla China sales drop 7% from March, and you think the bull run is over, you just fell for the clickbait trap. Here is the counterintuitive truth that the bears don't want you to understand. Tesla just delivered its sixth consecutive month of year-over-year growth in China. April sales were 79,478 vehicles, up 36% from last year. The stock popped nearly 2%. Investors celebrated, but the same report showed a 7.23% drop from March. So which number matters, the annual growth or the monthly dip? Let me break down what's actually happening in Tesla's most important manufacturing hub. And stay until the end for the 3 secrets that will change how you read every EV sales report from now on. I'll admit something. I used to panic at every monthly sales report. Up 36%? Great. Down 7%? Sell everything. Then I learned to look at the bigger picture. Today I'm going to show you exactly what Tesla's China numbers actually mean. We're going to look at the 79,478 vehicles delivered, the 36% year-over-year surge, the 6th consecutive month of growth, the March comparison that's worrying people, and most importantly, where those cars are going. By the end, you will understand why the Shanghai Gigafactory is Tesla's most valuable asset. Stay with me. Let's start with the actual numbers from the China Passenger Car Association. April 2026. Tesla China delivered 79,478 vehicles. That includes both domestic sales and exports to Europe, Asia Pacific, and other markets. The year-over-year comparison, April 2025 was 58,459 vehicles. April 2026, 79,478 vehicles. That is a 36% increase, the streak. This marks the 6th consecutive month of year-over-year growth. After a difficult 2025 where Tesla lost nearly half its European market share, the Shanghai factory is firing on all cylinders again. The year-to-date picture. January through April 2026 total is 292,876 vehicles, up 26.67% from the same period last year. The counterintuitive truth? 1 month does not make a trend. 6 months does. Tesla's China operations are not just recovering, they are growing. Now, let me address the number that the bears are screaming about. The monthly comparison. March 2026 was 85,670 vehicles. April 2026, 79,478 vehicles. That is a 7.23% decline month over month. The context that changes everything. The broader Chinese new energy vehicle market grew 7% month over month in April. So Tesla underperformed the market in April. Why? 2 reasons. Reason 1. March was a blowout month. March sales surged as the Chinese auto market recovered from the seasonal Lunar New Year lull. Comparing any month to a blowout month will look bad. Reason 2. Sequential slowdown is normal. Every business has monthly fluctuations. February was 58,599 vehicles. March was 85,670. April is 79,478. That's still higher than January, which was 69,129, and much higher than February. The counterintuitive truth? Monthly comparisons are noise. Year-over-year trends are signal. April 2026 was 36% better than April 2025. That's the number that matters. Now let me show you why the Shanghai Gigafactory is so valuable. It's not just for China. It's for the world. Europe is a major destination. Germany, France, the United Kingdom, Norway, the Netherlands, and Spain are all receiving Shanghai-made Teslas. And, the numbers are impressive. Sweden saw a 111% year-over-year increase in registrations in April. Denmark? Up 102% year-over-year. France, the UK, and Ireland are all seeing double to triple-digit gains. Over in Asia-Pacific, things are exploding. South Korea imported 13,000 units from Shanghai in April. That's a new monthly high, and a 1,050% increase from last year. Australia saw sales climb 145%. The new Model YL, which is the long wheelbase version tailored for Asia-Pacific markets, has launched in Japan, South Korea, Australia, Thailand, Hong Kong, and Macau. So, here's the counterintuitive truth. The Shanghai factory is not just Tesla's China production hub. It's Tesla's global export hub. When you see Tesla China sales, you're not just seeing Chinese demand. You're seeing global demand routed through Shanghai. Now let me talk about the elephant in the room. Competition in China is, well, fierce. BYD, which stands for Build Your Dreams, posted April wholesale sales of 314,100 vehicles. That is nearly 4 times Tesla's volume. But here's the catch. BYD is on its 8th consecutive month of annual decline, down 15.51% year-over-year. NIO delivered 29,356 vehicles in April. That's up 22.83% year-over-year, but down 17.27% from March. XPeng came in at 31,011 vehicles, which is down 11.51% year-over-year, marking the 4th consecutive month of decline. Now, here's the counterintuitive truth. Tesla is not trying to outsell BYD in volume. BYD sells a lot of low-margin vehicles, while Tesla focuses on premium vehicles with higher margins. Tesla's 36% growth came while BYD shrank. In a slowing market, growing while competitors shrink is a win. Let me leave you with the 3 secrets that connect everything we just discussed. Secret number 1. The monthly dip trap. Monthly sales comparisons are really designed to create headlines. March was a blowout month, and April was just slightly lower. That is totally normal. The trend that matters is 6 consecutive months of year-over-year growth. That's 26.67% growth year-to-date. So don't let monthly noise distract you from those quarterly trends. Secret number 2. The Shanghai export engine. Most investors still think of the Shanghai Gigafactory as just a China factory. It's not. It's actually Tesla's global manufacturing hub for the Eastern Hemisphere. Europe wants Teslas. Asia-Pacific wants Teslas. Shanghai delivers. The export boom is real. South Korea up 1,050% is not a typo. Secret number 3. The competition narrative. Flip. The story used to be, Chinese EVs are eating Tesla's lunch. Now the story is different. Tesla is growing 36%, while BYD shrinks 15%. The competitive landscape is shifting. Tesla is stabilizing. Local champions are struggling. So don't invest based on old narratives. So what should you actually do with this information? If you already own Tesla, just ignore the monthly noise and focus on the quarterly trends. The Shanghai factory is firing, exports are booming, Europe is recovering, and Asia-Pacific is exploding. That 36% year-over-year growth is the signal. The 7% monthly dip, that's just noise. If you're considering buying, watch the FSD approval timeline in China. The CFO expects approval in Q3 of 2026. That could be a major catalyst. Also, keep an eye on the new compact SUV, a more affordable Tesla produced in China. If you're a Tesla bear, your thesis that China is killing Tesla is facing some serious counter-evidence. 6 months of growth, a 26.67% year-to-date increase, and export markets are booming. The bear case isn't dead, but it's definitely wounded. The counterintuitive truth here is that the best time to pay attention to Tesla's China story is not when sales are exploding. It's when headlines are screaming about monthly dips. That's when fear creates opportunity. Here is my question for you. Do you think Tesla's China recovery is real? Or is the competition, BYD, NIO, Xpeng, still a bigger threat than the numbers suggest? Drop your answer in the comments. I read every single one. Like and subscribe if you want more myth-busting analysis on Tesla and EV stocks before the crowd figures it out. I'll see you in the next video.